Foremost, U.S. Treasury Secretary Scott Bessent says that he had an interaction with his Chinese counterpart in Washington last week. And he reiterated yet again in this ABC News interview that he thinks the Chinese will see the tariff level that's unsustainable, that basically they will have to negotiate and start conversations. And he says that he thinks there is a path to an agreement with China on tariffs. U.S. Secretary of State Rubio says Russia and Ukraine are generally closer to a peace deal than in the last 3 years. U.S. Treasury Secretary Bessent says the aim is to maintain a U.S. bond market the world's most secure and strongest. Bessent says that trade talks are progressing positively, particularly with Asia. That whole region is very important. You know, not just China, but Bangladesh. You're talking even India to a certain extent, Thailand, right? Vietnam, where there's a lot of manufacturing as well. U.S. Treasury Secretary Scott Bessent says U.S. consumers are still spending, which, again, that's like 74% of GDP. You need people to continue to spend money. So Bessent's kind of shooting down some of those recession concerns here. Donald Trump says when tariffs cut in, many income taxes will be reduced. And he says the focus will be on people making less than $200,000 a year. He says that maybe income taxes could be completely eliminated for people making less than $200,000 a year. U.S. Agriculture Secretary Rollins says the U.S. is holding daily discussions with China over tariffs. So you see how this is progressing, what sounds like in a positive direction. Well, again, a pause on tariffs is the only logical step forward at this point. And look at this. This is a pretty crazy headline. Warren Buffett owns 4.6% of the entire U.S. Treasury bill market per Bloomberg. That is insane. But first, before we get into the economic data, take a look at this week's lineup for earnings. Tomorrow morning, Domino's, MGM Resorts, Opera. Monday and after hours, Waste Management, NXP, F5, Teradyne, Nucor, Transocean, and Cadence. Now, let me just say as well, I think the consumer names are going to be most important for the broader markets. Even like a Domino's, right? Domino's is not like an important company to markets, but it's consumer related, right? It's food. More expensive than, eating at home for most cases. Are people still continuing to spend money? If that's the question we have to try to judge how the economy is doing, Domino's, Amazon, Starbucks, these are going to be the companies that are going to tell us more of that in real time. Like, not with a super lag. They're going to be able to tell us, is there a slowdown going on? Is it a bad slowdown? Is it a, little bit of a slowdown? Is there no slowdown, right? That is, I think, going to be a very important component of this earnings season that I will specifically be paying attention to, okay? Like Domino's, I'll be reading the transcript of that earnings call, okay? And I think, it's important that you do as well, or you just subscribe to the channel so I can give you the summary of it, right? There's always that option if you guys want to save your time. But nonetheless, that's what is really important this week as far as earnings season. Now, SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, Spotify, Shift4 Payments, and Altria report Tuesday morning. And after hours on Tuesday, Visa, that's another important one. Starbucks, Snapchat, First Solar, PPG, Booking Holdings, and some others. Wednesday pre-market, Humana, Caterpillar, Western Digital, Generac, ADP, and GE Healthcare. Wednesday and after hours, Microsoft, Meta, Robinhood, Qualcomm, Albemarle. Thursday in pre-market, Eli Lilly, Roblox, CVS Health, MasterCard, McDonald's, SiriusXM, and Shake Shack. Thursday and after hours, you have Amazon, Apple, Riot, Airbnb, Reddit, Big Bear AI, Atlassian, Five9. And then Friday morning, you have Fubo, ExxonMobil, Chevron, Apollo, Cigna, and Wendy's. Now, as far as economic data, starting off tomorrow morning, it's going to be slower, okay? Monday's not usually a huge day for data. You have Dallas Fed Manufacturing Index for April, expecting a negative 15 number. Last month was negative 16.3, so a little bit of an improvement, but still a very negative number. Tuesday, goods trades balance. Okay, that feeds into your GDP report. This is for March, so it will be for Q1. Retail inventories excluding autos, expecting that to be negative. Wholesale inventories month over month, expecting that to be positive 0.7%. All of that, again, feeds into GDP. S&P Case-Shiller home price year over year. JOLTS job openings, that's going to be huge, right? If the labor market is truly weakening, you'd expect to see job openings like plummeting, right? And this data is supposed to be for March, although I think really all government data is just really lagged, okay? So I don't know how much you can actually read into that, but you know, if companies are still looking to hire people, that's a sign that they're still doing pretty well. CB consumer confidence, that could be important. JOLTS job quits, Dallas Fed Services Index, Dallas Fed Services Revenues Index. And that is it for Tuesday. But again, lots of data, smaller data, lots of soft data this week, and as well, lots of hard data. On Wednesday, you get the ADP employment change, expecting 130,000 private payroll job ads. GDP growth rate quarter over quarter advanced data for Q1, you're expecting 0.4%. So still a positive number. The risk here is you could come in negative. The Atlanta Fed GDP Now tracker currently is negative 2.5%. Excluding gold imports, you're negative 0.4%. So, like, I don't know where they're getting that estimate for Q1 GDP here being positive, but like it's really negative as of right now. So, I mean, we'll see how the number comes in. That's going to be a big catalyst, though, on Wednesday. Chicago PMIs will be coming out as well, expecting that to get a little bit better. Core PCE month over month, expecting a really low number here, 0.1%. Probably a lot of that has to do with oil. We'll see. Personal income month over month expected at 0.4%. And another big data set, personal spending month over month expected at 0.4%. Okay. Consumers spending money, again, is a huge, contributor to this economy. You need to see people continue to spend money. So the better that data comes in, well, the better off, the economy is. Pending home sales month over month and year over year also will be coming out. So Wednesday, huge day for markets. On Thursday, you get challenger job cuts. I mean, you're expecting 290,000. Like, last month was 275,000. 290,000 is like 0809 highs, right? That's a crazy number. So the lower that is, the better. The higher that is, well, the worse off it is. Initial jobless claims are expected at 225,000. You have final numbers for S&P Global Manufacturing PMIs, and ISM Manufacturing PMIs for April will also be coming in. Employment, construction spending, new orders, prices paid, all of that to a lesser extent will be important. And then on Friday, you have non-farm payrolls. You're expecting 130,000. Again, higher is better, lower is worse. The unemployment rate expected to hold steady at 4.2%, although the estimates may change for this before Friday. I think the estimates could go up for the unemployment rate to like 4.3%, right? As some of the Fed officials have said, if you start to see layoffs, the unemployment rate is going to go up fast because we don't have as much immigration anymore, okay? And that is something the Fed will be looking at and could put pressure on the Fed to actually cut rates when that unemployment rate does start to, move higher. So it's just like almost every day of this week, you're gonna get slammed with important earnings and economic data. The economic data comes out in the morning, big earnings come out in after hours. So this week is going to be one of the most volatile weeks you have seen in a long, long time. And I do have an upward bias right now on markets, again, because I do think a good China trade deal headline is coming. At least not a deal, but a pause. And that's going to be really good for markets. But I think from an earnings perspective, maybe people are a little bit too negative on the economy. Everyone's threw in that recession towel. Maybe the economic data could be a little bit better than expected, but it's probably, not going to be great, all things considered. But again, I don't think the expectation is that it's going to be great out there. I think a lot of people are nervous about the data. When people are nervous or negative, bearishly positioned, you see a lot of that right now. It can lead to upside surprises pretty easily. And I still think that's kind of the market that we're in. People are, shooting first, asking questions later in their portfolio, or selling first, asking questions later in their portfolio. And you're still down 10% from all-time highs. If this is a good week, I could easily see another 5-ish% rally, which could take you into the 580s for the headline S&P. And I think above all else, again, when we get that pause on China tariffs, which I'm expecting at some point this week, that's going to be massive, right? Because people on Wall Street are going to be able to say, okay, yeah, we had this temporary, damage done, but it really increases the odds that it's only going to be temporary, that it's not going to be something that is maybe a huge recession catalyst, that maybe the economy can get through a little bit of a soft patch at some point, and damage is done. Labor markets, though, are still strong. People still continue to spend money. Maybe there is an outlet after all to all of this. Okay, that's going to be a massive catalyst. Okay, I have no idea when that's going to happen with certainty, but it feels like it should be this upcoming week. And I do think overall, a lot of people, most on Wall Street, are not really prepared for a China pause, right? Yeah, we've went up 4 days in a row on the S&P. On Tuesday, you were up 2.6%. On Wednesday, you were up 1.55%. On Thursday, you were up 2.1%. On Friday, you were up 0.72%. So it seems like someone is kind of front running this. But when you listen to what Wall Street is saying, they're not really talking about a China pause at this point. At least I'm not seeing that. And I think, again, while some people are positioning for that, for the most part, it's going to come as a little bit of a surprise to markets. And I would be shocked if you don't see a large reaction to that. It's not going to be a 10.5% move higher, but 3, 4, 5% move, that could definitely be in the cards. And that is how I am currently positioning my portfolio. Obviously, that's not a recommendation. Come to your own conclusions. Do as you please and what suits your portfolio well. I've said for a long time now, you really need to be positioned on both sides. You need to be ready to take advantage of the upside when that comes, and that's certainly what we've gotten a little bit of, especially in the past week. But you also need to be prepared for things to get worse from here. Now, it's kind of like a pendulum, though. It swings, okay? Ever since, Trump made those comments about China that kickstarted the last couple of green days, the risk has been growing towards an upside move because, tensions are dying down versus the downside move. And I've been kind of leaning into that. When tensions get worse, I've been, buying puts on this market, hedging for downside. As things get better, I've been trying to be quick to recognize that shift and switch to being a little bit more allocated to markets. And I think you're in that moment where you want to be a little bit more allocated to markets. Now, tomorrow morning's open is actually going to be very interesting because in after hours, the S&P closed at $551.23. Your 300-day moving average is at $551.63. So you're 40 cents away from breaking above your 300-day moving average. If you break above that, it could get pretty explosive to the upside. And that's a possibility coming tomorrow morning, especially with some of the headlines that we are getting here today. So let me know what you guys think about this down below in the comment section. Are you bullish? Are you bearish? Let me know your thoughts. Enjoy the rest of your day, and I will see you in the next one.